Hey everyone, welcome to another episode of Adam Talks, a podcast that takes an alternative look at retirement. This is Adam Bergman, founder and CEO of IRA Financial. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, welcome to another episode of Adam Talks. I'm Adam Bergman, tax attorney, founder of IRA Financial. And on today's episode, I'm going to be talking about day trading and capital punishment. April 15th is always a difficult day for most Americans. And this year was a little bit easier because there was no tax return technically due, no tax due. There was an extension until May 17th. If you had corporation or trusts, the tax was due, or any first quarter estimated payments, they were due April 15th. But due to COVID, the IRS extended the personal 1040 tax return deadline to May 17th. Nevertheless, April 15th is always a super stressful day, and I started thinking about potentially all the tax I'm going to have to pay in the next month because of some of the investments I've done. And like most of you, I did pretty well in 2020. Thank God, most of it in an IRA, although I still did some investments personally. Bought some Tesla and some cryptos, personal funds, and did pretty well. Sold the stock. I didn't sell any cryptos, but I did sell a bunch of stock. Made some money, short-term capital gain. So dreading the next 30 or so days when I'm going to have to come up with some cash. And kind of started me thinking, talk to some friends and say, hey, are you stressing about tax in the next 30 or so days? Because you still got to pay 15% or 20% if you earn more than 430 or so thousand, more than 441,000, you owe 20% capital gains. And if you hold the stock less than 12 months, it's considered short-term capital gains, and you actually owe ordinary income tax rates, which can go up as high as 37%. So just kind of gauge what some of my friends, colleagues were dealing with, thinking about the next month. And yeah, I wasn't surprised. Most people are like, damn, I'm going to have to give some of that cash away. I spent a lot of it. I invested a lot of it, but I got to figure out a way to pay the tax man in the next 30 or so days. So just wanted to kind of share those feelings, because at the same point, probably about 80 to 90% of my gains were in an IRA, Roth 401k or Roth IRA. So I was breathing a little bit easier because all those gains are sheltered. But it kind of made me think, why are more Americans not day trading in a Roth IRA? Why are so many people day trading on Robinhood, Webull, other brokerage apps, and not even considering day trading in a Roth IRA? Makes no sense. Well, number one, Robinhood doesn't offer IRAs, which is something that always bothered me. And that's why with Fidelity, we're launching our own robo/equity program, hopefully the summer of 2021, that will launch, where in a Roth IRA, you'll be able to day trade and buy stocks, and also robos, and also cryptos, and also real estate, and also pretty much anything else you want in a tax-deferred or tax-free account, which is so vital. Because as taxes go up, President Biden's talked about potentially raising the capital gains rate to 39% for earnings over $1 million. So we all may be looking at, well, not all of us, but some of us may be looking at a higher tax rate. Irrespective, even if the capital gains rate stays, if you hold something less than 12 months, you're paying ordinary income tax rates, whether that's 15, 20, 30, 40%. So even if you made 100 G's and you got to pay 15%, it's $15,000, you got to come up with that cash. That's due May 17th. Whereas if you did it in an IRA or Roth IRA, it's all tax deferred or tax free. You don't have to ever come up with that cash until you take a distribution. So what is the market looking like? Well, we know what happened in 2020, right? The S&P 500 gained more than 16%. At the year end, the U.S. market index rallied 70% from the market lows, right? So most of us made a lot of money. The Dow Jones was up about 7.25%, and the NASDAQ 43.6%. S&P 500 over 16%. FANG stocks, Facebook, Amazon, Apple, Netflix, Google. Those 5 stocks averaged 58% total returns in 2020. So a lot of us are going to be dealing with gains. Okay. And that's going to happen. The next 2 weeks, 3 weeks is going to be stressful because you probably reinvest that money. Maybe you spent it. Maybe you bought yourself something, improved your house, renovated your house, or did whatever. You're going to need to figure out how to get either 15%, or if your tax bracket was raised because of your gains in the stock market, you may be paying 25, 30% on that money. You got to come up with that cash. Okay. And that means liquidating other investments or just pulling out your profits and paying Uncle Sam. So just keep in mind, hey, when you're super stressed out over the next month, think about the Roth IRA. Think about the traditional IRA. Think about the 401k. Think about the Roth 401k. You can day trade in those accounts. You don't have to day trade in a regular taxable account. Now think about this. A lot of people don't realize, and a lot of people tell me, hey, Adam, I would do the IRA, but I want to use some of that cash. I was actually getting a haircut, and my barber said, what do you do? And I was telling him about IRAs, 401ks. I said, hey, you're a 1099. You rent a chair at this place. You should be doing a solo 401k. And he's like, yeah, I totally should. It's crazy. I said, you can do it. You can put away your under 50 19.5, or you can set up a Roth IRA, put in 6,000 since you're under 50, and you can do stocks. You can do cryptos. He's like, cryptos? Awesome. I'm totally into cryptos. I'd love to do that. He's like, the only issue is, let's say I need some of that cash to deal with some bills. I want to go on vacation. He's single, so he doesn't worry that much about, kids and education and savings, but he still likes to travel. He hopes to travel this summer once he's vaccinated. So the hang up for him was, hey, I can't use the cash. I said, hey, how about this? If you make contributions to a Roth IRA, you can pull those contributions out tax-free anytime. So let's say from 26 to 32, you put in $5,000 into a Roth IRA. Okay. 6 years times 5 is 30 G's. Okay. You can always pull that money out anytime you want. The earnings have to stay in the account and will grow without tax. And you need to be 59.5, and the Roth needs to be opened at least 5 years before you pull the cash out. But the contributions, what you took from your salary or from your pocket and put into the Roth IRA, that can always be taken out as a distribution tax-free anytime. You do not have to be 59.5. You do not have to have the Roth open 5 years. So that gives you some flexibility, right? You can say, okay, for 5 years or 2 years, I put 5,000 in, it's 10 grand. Now it's worth 16 grand. I'm going to take 3-4 grand out, pay some bills. That's cool, right? It's less than the contributions. You can pull it out at any time you want. And then the rest of the money is going to continue to grow without tax. So there you have some flexibility. You can pull some cash out tax-free, but the rest of it can keep growing without tax. And you don't have to worry about April 15th or May 17th or short-term capital gains or long-term capital gains or basis, holding period. How about this? Robinhood. They don't let you do lots, right? So it's first in, first out. You can't kind of pick what stocks you're selling. It's FIFO, first in, first out. When you buy something and then sell it, they're going to sell the first thing you bought. Other brokerage firms will let you do lotting, where you can say, okay, I want these lots of stock. I'm going to sell them. Well, let's say you bought Amazon, 15 different prices. You're going to pick and choose what you want to sell. Some of the fintech companies like Robinhood won't let you do this at this point. They just go FIFO, first in, first out. And that's how they select what you sell and where your gains are attributed to. So you do, in some cases, have some options to kind of pick and choose what you want to sell. So you can try to harvest some losses and use the losses as shelter gains. I mean, you can play around with that stuff. But if you really don't want to deal with that and want stress-free, tax-free investing or tax-deferred investing, consider going IRA, Roth IRA, solo 401k. Roth 401k, you can put away 19.5 if you're under 50, 26,000 if you're over 50, and a solo K if you're self-employed. You can invest it in stocks, also alternative assets like real estate or cryptos. And best of all the income and gains are deferred or tax-free in the case of a Roth. The 401k has a little loan option. So let's say after 2 years, you put in 19.5, right? So you've got $39,000. You can borrow half of it tax-free, right? So let's say you're like, I need 10 grand. I want to put down for a house, or I want to pay off my medical bills, or buy a car, whatever. You can just take half of that, say 15 or so, maybe even more if you want. You can go all the way up to half and pull that out tax-free, penalty-free, 5-year loan, paying yourself back, minimum interest rate of 3.25%, which is prime. So you got tons of flexibility. The rest of the money in the plan will still grow without tax or tax-free in the case of the Roth, but you still have access to some of those funds to use, because that is the biggest, I think, hurdle why people don't save more or don't day trade more in an IRA or Roth IRA is, I want the money now. I don't want to wait till 59 and a half. I'm 33. I want to go to Cancun. I want to buy myself a car. I want to buy a Rolex, whatever. I don't want to wait till 59 and a half. I'm going to be old and gray then, and who knows what's going to happen, and I don't really care. Well, I would say, listen, you can do that. Save tax-free, save smartly. You don't have to deal with tax returns and all this annoying capital gain tax treatment. And you can pull out what you put in if it's a Roth. So after 3 years, if you put in $4,000, it's $12,000. You can pull out to buy yourself a Rolex or go to Cancun with your girlfriend or boyfriend. Like, you still have flexibility. Or if you did a solo K, you can borrow 50% of it and use that tax-free, penalty-free. So lots of opportunities. Capital punishment for some. If you invested in an IRA or Roth IRA in 2020, you probably had tons of gains. You can sleep soundly on May 16th. You don't have to be super stressed about coming up with the cash. I know a bunch of Americans will, right? People that chased GameStop, AMC, probably made a bundle of cash, right? Lots of people made bundles of money, whether they were day trading or trading cryptos, right? Just the fact is everything went up, whether it was real estate, NFTs, everything, gold, everything went up this year, everything. So people are going to make a lot of money, but most people don't realize, or now they're realizing that the tax man cometh. Payday, baby. 15% at least on long-term capital gains, 20% if you make more than $440,000. And if you held it less than 12 months, which most day traders do, right? The whole idea of most day traders tend to hold stocks less than a year. Day trading. You're going to pay ordinary income tax rates. Guess what? If you did really well, you made 100, 150, 200 grand, you may pay 30% taxes. You got to come up with that cash in the next month. Now, some people may try to argue they're a business. Day trade, get some deductions. That's fine. You still have to pay individual, if it's Schedule C, single member LC, you're still paying ordinary income tax on it. So remember, I think this will be a really, really good learning lesson for a lot of Americans who kind of with COVID started doing a lot of day trading, making a lot of money. And it wasn't hard this year. Everything went up. Anyone could have made money. My kids made money. I look at my kids' Robinhood account. They're up 13%. They don't even know what they're doing, right? They just bought the FANG stocks, basically, and some other stocks, and they're up 13%. Last year, they were up more. So we didn't sell anything, so thankfully there's no gains. But if they did, they were going to have to figure out how to pay the tax, and a lot of people just don't. They procrastinate. They don't withhold it. They don't save. And the next month, they're going to deal with the consequences. So just when you're writing that check to the Department of Treasury and it's painful, okay, I know it sucks for everyone, just remember the Roth IRA. Remember the Roth 401k. Remember the traditional IRA, traditional 401k. You still have some flexibility, some liquidity to spend if it's in a Roth IRA or a 401k. And you get to generate tax-free or tax-deferred gains and income, so you don't have to ever deal with all this annoying tax consequences, and you don't ever have to write that annoying check to the Department of Treasury on April 15th or May 17th this year. So listen, making money is great. God bless everyone who did well last year. Paying taxes is okay, but if you can minimize it, why not, right? Famous case, Gregory v. Halvorain, Supreme Court case. Americans do not have an obligation to pay the highest tax. We have to pay what we owe, but we're no right that we have to pay the most. So use the best legal tax shelter out there, the Roth IRA or the Roth 401k or the IRA or 401k, because if you don't trust me, I'll say it again, trust Albert Einstein, who said tax deferral, compounding interest is the eighth wonder of the world, right? Your money grows faster without tax. You don't have to write that annoying check to Uncle Sam. Think IRA, think Roth IRA. So that next April 15th, when you have hopefully the S&P 500 and NASDAQ, crypto market, have a bull run for another year, make 15, 20, 30% of our money. Wouldn't it be nice to just shelter it in a retirement account and never pay tax on it, especially at a Roth? Pull out what you put in, let the earnings grow without tax, bang. You get best of both worlds. Cash if you need it, and never paying tax on the gains. So just wanted to kind of give you something to chew on over the next month and hopefully the next year. If you take anything away from this podcast, go open an IRA, Roth IRA, put a buck in. I don't care what you invest in. You don't have to invest in alternative assets. That is my passion. I believe in the power of diversification. I believe the power of investing in what you know and trust. But if you don't trust alternative assets like real estate, that's fine. Buy stocks. I don't care. Just open an IRA and start putting money in. Start thinking wisely, thinking smartly, invest smartly, invest through a retirement account. It's a golden ticket. The system is literally rigged in our favor. We just need to take advantage of it. Fortunately, we're not all educated about it, but that is what I'm trying to do. Just giving everyone my experience as a tax lawyer, my education background, my experience just talking to so many clients who have made so much money in their retirement account and have done it so smartly and are doing it so tax efficiently because they're never going to pay tax on their gains. So just want to share the love with you guys. Think about it. It's great to make money, but imagine if you could do it without paying tax. That April 15 deadline will not be as stressful, I promise. So I wish everyone happy investing. I think 2021 is going to be a great year. I think the markets will continue to rise with low interest rates. There's nowhere else to invest. So I do think the boom in the markets will continue. Real estate prices, I think, will also keep going up. Cryptos, stocks. So I think you'll have a lot of tax to pay, hopefully, in 2022. But imagine if you had all those gains but didn't have to pay the tax because you listened to this podcast and said, hey, listen to this guy. I don't know. He seems like he knows what he's talking about. I'm not sure, but let me try. I'll go open an IRA. I'll put some cash in and I'll trade. And you can go, hopefully you'll go on our platform in the next 3, 4, 5 months when we launch it with Fidelity. But until then, go anywhere. I don't care. Go to TD, go to Fidelity, Schwab, E-Trade, open an IRA, Roth, and buy stocks. Buy whatever you want. Just watch that money grow without tax. And you don't have to worry about cutting that really annoying check to the Department of the Treasury next April 15th. So until then, stay safe, stay healthy. Thanks again for listening. Subscribe if you haven't. Talk to everyone again next week. Take care.